Welcome all to the 24x Trading channel. I'm your one and only Kimali Kobia, the founder of this channel and even the founder of Late Night Forex Trading Academy. So, without wasting much of your time, I just want to share with you more concerning the market, my market approach. So, let me just erase my workings here. My initial workings here. Let me erase. So, as you can see here, starting from monthly time frame, you can see that the market you can see what the market is on a bullish trend. This is due to formation of higher highs and higher lows. First, as a trader, what I initially do, I just spot my area of values. Some calls them support and resistance. So let me just use those words, support and resistance. I do just my area of values. I go to line charts. Then after just spotting my area of value of my area of interest, after that, then I somehow use some trend lines because trend lines and support and resistance can't be separated. Then I go to lower time frames like the weekly. When you move on to weekly, the first thing maybe here on monthly, have a look at this. You can spot there is a certain pattern which was initially formed here as a reversal pattern, and that's the inverted head and shoulder pattern was formed here initially. Let me show you how it just have a look at it. This is how inverted head and shoulder pattern looks like here. But the problem with most of traders, what they just don't know is more about these patterns. The most profitable pattern is inverted head and shoulder pattern. So as you can see, one was formed here on this area of value on our support zone. Have a look at it. I can spot. I do spot one here. This was our head and shoulder pattern on a time frame that is weekly. After on monthly, after spotting my area of values on monthly, I go to weekly. Weekly after weekly, I go to daily. So when you have a look at the daily time frame, you can see formation of several patterns here. Have a look at this. On formation, this was our left head, then right shoulder. When you just have a look at this being our area of value, we got a bullish flag pattern here, and these are some of the most profitable patterns as a trader which you should be ready to spot. As you all know, the market, the nature of market approach, after an impulse move, we just do wait for some kind of consolidations. And on these consolidations, as a trader, you should trade them once after breakout. And after breakout, just wait for some retest. And if the retest fails, here on, when the retest fails, what you should do as a trader, you have higher highs, formation of higher highs and higher lows. This is what I just have to do to wait. It's not enough, master, as a trader. You just wait here, or you just have to wait for maybe let me organize this pattern here. You just wait for trade and breakout and retest. Sometimes the market may fail to retest here on this point here, may fail here. But if it fails here as a trader, you should be ready to move on. Have a look at this. Have a look at this pattern here. Here, have a look at this. After the market retesting here, this support zone, with a bullish flag pattern, the market broke out impassively and failed to retest. Maybe some of you are waiting for some retest, and that never happened. So, as a trader, you just have to draw your area of value as I've done mine here. Our next area of value, our next resistance zone, and just wait for it to be broken. And after it was broken here, then the market retested. And initially, as the market had initially done, have a look at this. The market again formed a bullish flag pattern here. So, as a trader, maybe you could have entered here or waited here after formation of this bullish engulfing candlestick, as some may say, or some even may say it's a morning star. But all in all, as you know, the best thing is understanding the market as a price action trader. Then, after you spot your next area of value. Have a look at this as a trader. You enter here, and your target would have been 828 pips. Maybe even the stop loss would be just below. Your stop loss would have been here at this point, below here. So as a trader, you should always be ready to react after the market reacts, but never as a trader read the market, because what happened yesterday will happen tomorrow, and what happened maybe 3 years ago will happen in the next 6 years ago. Six will happen in the next 6 years. So what I may advise you as a trader, always be there to react to the market after it has proven or shown its true colors. Have a look at this. The market broke and tested. Then the market continued. Have a look at this. Higher high, higher low. We got some higher high, higher low. Then the market did what? Have a look at this. The market retested again. What happened yesterday will happen tomorrow. And what happened tomorrow? Just kindly or patiently wait for it, because what happened yesterday, the market will come back and do what it did yesterday. So we got this being our resistance zone, market breaks out and retest. And even as you move to lower time frames, because as a trader, what I do, I just analyze with higher time frames, 4 hour time frame and 2 hours, 1 hour and 30 minutes, and 15. I do also use 15 minutes, mostly on synthetic indices. I just move on to lower time frames. What I go to do with lower time frames, I am just there for some entry confirmations, because there at 15 or 30 or 1 hour, there are some for me there are some candlestick patterns which have been formed there, inverted head and shoulder, double bottoms. Then when I spot them on my area of values and they are in direction with the market trend, I don't just hesitate there to take my trades. That's what I may advise you as a trader. So what happened yesterday? What happened here on 14th April? Just happened again on 23rd June. Even here, have a look at this. What happened on 23rd, on 27th June? Even happened again here on 5th October. What happened on 5th, what happened on 15th October even happened again on 20th November. So the market is there. What I may advise you as a trader, always be there to kindly wait and see what the market will have to present to you. But if you fail to do so, then your life in trading will be hard. Have a look at this. Maybe I do some analysis maybe on GJ just have some analysis, maybe on CAD GPY. Just have a look at CAD GPY. As usual, we go to monthly time frames, and then I'm just there to have a look at what the market is presenting to me. And when I have a look at this, I can see that the market already is on a certain zone, areas of values, something that I never hesitate to do once I just approach my market. What I do, I just react what the market has shown me. I can't predict like now, say that, and then in the few coming months or few days, the market will just break this zone. No, I can never read the market because I know what happens when one tries to read the market. You are just there to lose. Then, as I had said earlier, trend lines and support zone. You can't just separate them. As you can see, the market was initially on a bullish trend. Then currently, what happened to the market? The market now we do experience some sort or some kind of consolidations. And even here on this kind of consolidation here, I can see something. I can see formation of an inverted or formation of a head and shoulder pattern. Yeah, I can just see it here. So if I may happen to buy, what I do expect the market to reverse up to this point here. And once it reverses to and breaks this trend line of mine, then we just show you the path of the market. What I do expect the market to break and retest. And once the market retests here, then I will be there to go for some sales. But if it fails, I have nothing to do with that. I just have to wait for on lower time frames. Here, I just have to wait for what will happen here. Formation of an inverted head and formation of a head and shoulder pattern, formation of double top. Then I'm good to go. But let me finish with my analysis here and see what the market is ready or the market is there to offer, because it's advisable. Don't try to read the market, but try to follow what the market is doing. And then failure to the market reversing. If the market will then move on, I have nothing to do. I will just have to wait for the market to break this resistance zone. And after this resistance zone has been broken out, what I will do, I will just wait for the market to move on with its bullish trend. The market reverses, and after the market has reversed, what I will do as a wise price action trader, I will just wait for formation of some kind of patterns like falling wedge. I may also wait for inverted head and shoulder, bullish frag pattern. Those are what makes me, those patterns are what makes or separates profitable trader to non-profitable trader. So as a trader, you should never think of reading the market. No, just wait patiently. Because because as I look on this market here, I can see here initially we had a shoulder pattern. Even here we got some kind of head and shoulder pattern. Even here, when you move on to lower time frames, you can spot them. So as a trader, what I may advise you, always be there to wait for the market to react. But if you come with intentions to read the market, you will understand you will receive a lot of calls from margin calls. You know, experienced traders know what we do mean by margin calls. Margin calls, for those who don't know, one day, no problem, you will know. One day you will be there. You understand what we do mean by margin calls. So that's what I had for today as your mentor or as Late Forex Trading Channel founder. So that's all. Maybe those what I those are my analysis concerning the market on the few coming days. I just have to wait for the market reactions. I have nothing to tell the market. The market has it all to say to me. Even now, I can do spot something else and a pattern which we do call it an ascending pattern. An ascending pattern is being formed here. Ascending pattern. Let me show you. Have a look at this. This is the pattern which has been formed here. So even here, I do spot some kind of entries here. I just have to wait what the market is telling me because I am not here to read the market. The market here, maybe this could be our left shoulder. This becomes our head, neckline, right shoulder, formation of a bearish engulfing candlestick. Then I just enter the market. I do place my cells and wait patiently for the market to react. My stop loss being maybe on the position of my head or my right shoulder. But what determines my stop loss? What will determine your stop loss is my entry point. My entry triggers? What triggered me to take this trade? And that's all. So, what I may say, just have blessed night. Yeah, I'm your one and only mentor, Kemadi Kobia. So, kindly like, share, and subscribe to my YouTube channel. That's all.